What's up, BullMarketBully family? Today we're diving into PACCAR Inc., a major player in the trucking industry. If you're into reliable stocks, stick around for this one. Like, comment, and subscribe to BullMarketBully for all your stock review needs. Company summary. PACCAR Inc. designs, manufactures, and distributes trucks under premium brands like Kenworth, Peterbilt, and DAF. They keep goods moving across continents with efficient and reliable vehicles. From long-haul freight to construction, Pcar supports industries that keep the economy running. With a focus on quality and innovation, Pcar is a cornerstone in global trucking. Financial overview. Let's talk numbers. PACCAR pulled in $34.63 billion in revenue last year, with profit margins of 13.51%. That's above average in the heavy machinery sector. Its return on equity is a stellar 27.14%. PACCAR's debt-to-equity ratio stands at 83.65%. They've got $9.15 billion in cash, funding innovation, and weathering economic storms. Compared to Daimler and Volvo, PACCAR stands out for its financial discipline. Market trends and competitive landscape. PACCAR operates in a booming industry, with the global trucking market growing due to rising e-commerce and supply chain demands. PACCAR's competitive moat includes premium brands and advanced tech. They excel with fuel-efficient engines and autonomous electric trucks. Competitors like Tesla are shaking up the game with their electric semi, while Daimler and Volvo focus on EV and hybrid technologies. PACCAR's strategy? Focus on partnerships in R&D, like their battery joint venture with Daimler and Cummins, to stay ahead in the EV race. Future prospects. PACCAR's growth opportunities are exciting. Investments in electrification and autonomous driving set them up for long-term success. Expansion into Asia and South America opens new revenue streams. Challenges include supply chain disruptions and regulatory pressures, but PACCAR's strong balance sheet and strategic investments should mitigate these risks. Investment strategies. Is PACCAR a buy? With a price-to-earnings ratio of 11.73, it looks undervalued. Analysts set a one-year target price of $115, offering about a 10% upside. PACCAR's fundamentals and growth make it a strong addition to a diversified portfolio. Final grade. Based on its financials, growth potential, and competitive positioning, I give PACCAR an A- for long-term investors. It's a reliable stock with solid upside and a dividend yield of 1.26%. Bonus tip. PACCAR's partnership with Daimler and Cummins to localize U.S. battery cell production is a game-changer. It advances their EV strategy and shields from supply chain issues. Watch this partnership. It's not fully priced into the stock yet. That's it for today's review, Bull Market Bully crew. If you found value, smash that like button, drop a comment, and don't forget to subscribe for more stock reviews. Catch you in the next one.